Well, we'll get started. So welcome, everyone. Thank you to our in-person audience and an online audience as well. And I'm really excited to welcome Michael. Michael Merlin is founder and head of Merlin Wealth Management. So we always sort of start with the same question and we end with the same question. So we'll start with, tell us a little bit about your leadership journey, how it started, and how you ended up in your current position supporting families in financial planning.
Sure. So first, thanks for having me. It's so nice to always be here. As you mentioned, I started in corporate finance, which was an interesting beginning in the mid to late 90s. We were kind of going into that dot-com bubble that really burst. And I don't know what about me at the time made me realize this, because I just graduated from college. I knew nothing. But my thought was, working for somebody else is really risky. So how can I use my finance degree in a way that made it a little bit more about my ability to perform and not necessarily being one of a few 100,000 employees. And I was over at my grandmother's house and I was helping her with her finances. And she said, of all the people that ever looks at this with me, you always have a better way of explaining it than anyone else. And I kind of walked out of her house and I was like, interesting. I did a little networking, and fortunately, one of my dad's law partners was friends with a guy who was in wealth management. And I just went to his office one time. I went and sat with him for what I thought would be 15 minutes. I thought he'd give me 15 minutes to talk about the wealth management business. We ended up talking for like 3 hours, and he ended up hiring me about a year later. I worked for him for 12 years, and I bought his practice in 2009, which wasn't a wonderful time to be taking over something and starting with your first leadership role in the middle of one of the greatest financial crises in the history of the country. But that was the timing, and that's kind of how I got where I am today. That's how we started. Did you feel prepared as you took that over, particularly given you were during the housing crisis? I read that question when you sent it to me, and I was like, does anybody ever answer that question? Yes. I don't know that even today, after doing this for almost 30 years, I walk into the office every day feeling like I'm fully prepared. So I think the biggest attribute looking back on all of it is adaptability. The worst thing I think I remember anyone ever saying is, well, this is the way we've always done it. It's always the worst thing. And in looking back, I think that was always something that I was willing to do. I was always willing to try something new. I knew that if we made a mistake, we could pivot. I knew that if we didn't try, though, we were going to be static, and I didn't want that.
But I really am interested in your philosophy of investing and saving, and in particular, preparing families for that. If you could share with the audience just some of your philosophy, particularly for saving for intergenerational wealth.
You have to have the patience to instill good habits. And I think those good habits in finance, right, are transitory. You have to pass them along, right? You can't just have them for yourself. You have to have them for yourself, your spouse, your children. There's a lot of habit building in financial planning. There's a lot of, just sort of really kind of disciplined, not very exciting, do this, put a few $100 away every month, et cetera, et cetera. When you've done it really well, right, and you've allowed compounding to work for you, and you get to a point where you say, wow, now I have more than what I need, and then you can start thinking about multi-generational planning, right? What do I want to do with this money, right? And that's when that translation of the habits down to the next generation matters. That's when your money story matters. How do you feel about money? What does it mean to you? All of that matters when you're thinking about passing money along to next generations and watching those generations do the things that you want to see continued in your legacy.
You and your family are committed to philanthropy and supporting really important causes. What is some of your philosophy around your giving, or some of your pillars in terms of where you want to invest money in that area?
I think pillars are really important. I think when we counsel our clients about philanthropy, the main thing is to have a mission statement and to understand where you want your funds to make a difference. I think you have to be very committed to those pillars. I think it also helps you as a philanthropist because it helps you focus. Once you're out there as a philanthropist, people get to know you really quickly, and they want you to invest in a lot of things. And so having a mission statement is very helpful because you can tell someone, look, that's not part of my mission statement. And so I think that's very important as well.
What do you think ultimately the micro-credentials at KSU will be able to do?
My vision is that we should be able to take this incredible success that we've had here, and we need to broaden it out. We need to be able to scale it, whether that's across the state or ultimately we find reach with universities outside of the state, across the country. I think that would be incredible. The main thing is that financial education is not formally taught anywhere, right? It's not taught in preschools, it's not taught in middle schools, it's not taught in high schools, it's not taught in colleges. I think first it's putting awareness out there that it's not happening, and then it's finding a way to infiltrate these different levels of education with the ability to provide appropriate financial education.
Yeah, I mean, it's just wonderful. It really wasn't happening at KSU or any university I've been at the last 25 years. So transitioning back, how have some of the changes in your career as you've moved into different companies, et cetera, how have they impacted your personal life?
So, I think the most important thing for anyone when their career is encompassing in some ways is to stay grounded. I think stress and kind of bringing that stress around can create issue, and so I think you have to have other things that give you fulfillment. I think being stimulated outside of your career is really important, and that's something that I realized early on I needed to do, and I've been fortunate to pick up some good hobbies to do that. But again, I've also had the time and made the time and the flexibility to spend a lot of time with my family. I never missed a parent-teacher conference. I never missed a baseball game. Those things were important to me, and I think I tell people all the time, you got to put those things on your calendar. No different than a client meeting. If my son has a baseball game, I'm not rescheduling to go do something else. That's just as important as if we had a big meeting to happen in the business.
So in terms of looking at who might be role models for you, what do you see as some of the top characteristics you've tried to emulate from other leaders or mentors you've had?
I think the thing that to me links all of them together are probably 2 or 3 common traits, right? Number one, the willingness to give back. I also think that the traits that many of those folks, beyond just being willing to kind of be a mentor, character, culture, ethics, perseverance, grit, those were all the things that I was taught. You don't stop, right? And all of my mentors have shown me as in an example or just said straight out, you don't stop. You find a way to keep pushing forward.
So if you could go back in time and talk to an earlier Michael, what might you have told yourself or given yourself advice, not necessarily to change something, but just what would you have told that earlier version of yourself?
I think a couple things. One, calm down would probably be the first. The younger me was very quick to lose my patience and get fired up about stuff. And I think as you get wiser and more experienced, you realize that the win-win is the better outcome, right? So I may be feeling like I'm getting wronged and someone else is wronging me, but the better way to get out of that is for me to win and for them to win, right? Not to try to go and eviscerate them, but to make it so that everybody wins. And it's a less stressful way to live beyond everything else. But I also think that comes with experience and wisdom. And so, if that was one thing, that's probably what I would go back and tell myself.
And do you act that way now moving forward? Have you practiced that?
Yes, you can ask my wife. I'm much calmer these days. I don't, it's hard to get my blood pressure up. I don't really raise my voice very much. I think again that comes with a self-confidence and a comfort level to be able to say, I've seen a lot, and I think I can handle it.
How are you using AI right now, and what do you see in terms of your industry and the way in which it'll play out?
I think AI is the biggest opportunity of this generation. I also think it's the biggest challenge, right? Nobody really knows what they're going to do with AI. Right now, to me, AI is a little bit better than a parlor trick in a lot of ways, But from an efficiency and productivity standpoint, I really don't think we've seen a lot of evidence that it's creating more productivity to a significant degree and profitability within companies. There's a lot of spend going out there to make it available to people, but I don't really know. I think we're way ahead with the spend, and we'll grow into that capacity. And then each business, each industry is going to have to learn how to use AI to be productive. I think it will absolutely change the job market. The one thing we feel very comfortable about is that the biggest value add that we bring to our clients is is personal relationship. It's a it's a connectivity to their family, to their multiple generations, et cetera, and that can't be replaced by AI.
So given how important the interpersonal and connectivity with your clients, what have been some of the most challenging situations working with clients?
Yeah, I think it's twofold, right? I think family dynamics can be the single biggest point of success for multi-generational wealth planning, can also be 100% the cause of failure. When you hear that a significant fortune is lost by a family, it's typically not because they made bad investment decisions. It's typically because some family dynamic has become so toxic that it ripped the family apart, and therefore it ripped all the money apart, whether that was all the money went to lawsuits or whatever the case may be. I would say the second most challenging thing for us is when you have we have challenging environments like we hope we don't have another one, but we've had two. I've had at least two in my career, maybe three, whether that was 9/11 or the Great Financial Crisis or COVID. The unknown is very disruptive to people, right? And I think that's really where that's where we earn our living, right? Is when people are uncertain and they're scared, they tend to make bad decisions. And it's our job at that point to help them remain calm and not make those decisions.
So you discussed buying or starting your own business, taking over a business right during the 2008-9 financial crisis.
Yeah.
So how did you work through that adversity, and what role did perhaps some internal resilience play in navigating through to 10, 11, whatever year it was, where things started to shift?
I read a lot. I'm sure all of you do as well. And I pick up quotes, when I read, and I kind of stick those in certain places. And I think during that time, the one that kind of kept coming to my mind was that disruption isn't the enemy of stability. It's the engine of progress and growth. Any business, right? When you start a business or you maybe buy a business, you have a plan. You think to yourself, there's changes I want to make, there's good things I want to change, there's things I want to do. But what you don't know is you don't get into that right away. You have to deal with some of these disruptive factors. You have to, do a lot of outbound communication. You have to sit with a lot of people. You have to make sure everybody's comfortable. You have to make sure that you kind of retain and harness the trust between you and your clients or customers. And then from there, once things have stabilized, then you can kind of have a platform to put in your vision of how to grow the business and make it better. And then I think the other piece that's really important is that even after you get to the growth stage, then there's this thing we call the messy middle, which is, you've started at the beginning, it's exciting and fun, you've got the energy to get through that really disruptive period, you start to grow, you see the results, but then things kind of like stop for a little bit, and it just sort of flattens out. And how do you stay motivated during that period? What do you do? How do you inspire your team members? How do you inspire yourself, to kind of say, okay, there's going to be another peak and I'm going to be ready for it.
So would you say taking on and starting that business was the biggest risk, or is there some other risk that you took that it really worked out for you?
I think when we sold our business to Rockefeller, I think that was probably the biggest risk. And the reason I say that is because if any of you have ever read Bob Iger, who was the CEO of Disney, his biography, the thing that was the most impressive to me about Bob Iger is that he went to transform Disney at a time where Disney was at its peak. Everybody would have said Disney was operating at its most optimal level. There was nothing broken, nothing wrong. Every part of the company was strong, the broadcasting, the parks, all of it. But he looked around the corner and he saw that digital transformation was coming, and that people were going to consume differently. They were going to get their news and their content differently, and he was obviously right in what he was thinking. And that's kind of when we moved to Rockefeller. That's how I felt. When we were at Morgan Stanley, we had built a very stable, strong, predictable, consistent business. But I knew there was more that we could do, and we couldn't do it on the platform we were on. So I think that was a big risk, but I think it was the right thing to do.
So related to that, what are some of the challenges your industry is facing now, coming out of 5 years out of COVID?
Yeah, I think as we talked about earlier, I think figuring out how to adopt AI in the proper way I think is one. I think one that has been uniquely different since COVID is talent acquisition, retention, and talent management, right? We are a very in-office culture. We meet with our clients still face-to-face. We love Team and Zoom, but not for a lot of the things that we do. And so, the hybrid workplace is not wonderful in our industry. And we've also had a hard time with people with experience in our industry. It's a really interesting time. It used to be if we were looking for a new position, we'd go out, we'd put out a post or something, and we get a lot of applications from people in the industry with 5, 8, 7, 10 years of experience. And we've noticed recently that in bringing those people in, that might not be the right thing to do going forward. With all the technological changes that are happening, I'm not sure that all of that experience matters as much as it did maybe 6 or 8 years ago. So we've started now hiring, right out of college, training, and then the amount of value add that we're getting from those new hires quicker is amazing because they are so much more adaptable to the technology, and the AI for them is second nature. And so I think we're going to probably continue along that, which again brings in different challenges because we have to train them and mentor them before they can really add kind of an ROI to the business. I think they're unbelievably motivated, creative, driven, and they're going to bring things to our business that we don't even we don't even understand yet.
So before we turn to the audience, I always end with, what is the most valuable lesson you've learned as a leader?
That adaptability I talked about before, that willingness to disrupt, I think you have to have that. I don't care how long you've been in business. I don't care how long you've been running your business, 10 years, 15 years, 50 years. You have to be willing to learn and then unlearn, right? I think that's the most exciting thing. So, I would leave you with that, and the sense that constantly be thinking of ways to innovate, be creative, try to break things. That's I think the way we feel about it. If even if it's something that's been successful, I think you can always make it better. I think pursuing your passion is the most important thing. I think I read something that said, if you pursue your passion and you are living that passion every day, the money will come. Your ability to live will come. The jobs that my kids are going into are not things that have like consistent salaries necessarily attached to year one. My son, who's at Wash U, will have 4 of his roommates go into Wall Street facing jobs, probably making high 5, low 6 figures starting, and my son's going to go into a job where he may not make any money the first year that he's in it, right? And you can't be discouraged by that. You can't be, like you said, like we said before, you can't you can't stop just because you're starting at a different point, right? It just means that perseverance, that habit building, that that continuous drive has to stay there, right? And so I love the fact that this generation of workers isn't, I think we've gotten out of this stereotype of, everyone who's successful has to be a doctor, a lawyer, a banker, whatever. Like, I think, there's so many incredible careers that people can go into now if you follow your passion. You can be an English major, right? And end up, in some social media place, like as an influencer, writing amazing articles about food or travel or whatever the case may be, and you're following your passion, but you're doing it in a completely unique and different way. And so, I just hope that this generation follows that passion wherever it takes them, and doesn't feel pigeonholed into doing something just because they feel like they have to earn a paycheck. My background, I came from a long history of entrepreneurship, and so both my mom's family and my dad's family immigrated to the United States. My mom's family from Romania and Poland, my dad's family from Russia. They all had to be entrepreneurs. My dad's great-grandparents and grandparents were merchants, so they were selling stuff to people. They ended up getting into the grocery business. My mom's parents were survivors of the Holocaust, and so they, again, when they got to the United States, besides just feeling the immense sense of freedom and gratitude to be alive, they were also small business owners. And so, having seen that in my past, I think maybe that was somewhere in my, stupid 21-year-old brain, telling me that was something that I could do. I think, to me at the time, I think naivety was a blessing in the sense that I wasn't thinking about, well, obviously you're much more secure in a, multi-billion-dollar company than you are trying to launch off and do your own thing. But I just wanted more control over my destiny. I wanted to, kind of, I would take credit for things I did well, and I was happy to take the blame for things I did wrong. But, I didn't want to be just a number. I remember my very first review when I was at Bank of America. When I looked at the paper, it didn't even have my name on it. It had like analyst number, like 1647. It was like jail. And so I was like, that just didn't excite me. It just didn't make me feel like, that was where I was going to learn, be able to reach my greatest potential. There were probably 2 times in my life where my dad was like, "What are you doing?" One was a relationship thing with a girlfriend in high school, and the other was this. And he was like, "Are you sure you know what you're doing?" He was not unsupportive of it, but he definitely questioned, like, "Are you sure you know what you're doing?" My father-in-law, who wasn't even my father-in-law at the time, was more vocal. It was like, "You're an idiot. Like what are you thinking?" To the point where he actually scheduled interviews for me with a different bank. He worked for a bank too, and so he scheduled interviews for me with his bank, called me on a Sunday and said, "You're going to fly up to New York on Monday and do these interviews." And I'm like, what are you talking about? I have to go to work on Monday. He said, "Well, you'll call in sick, but you're going to come up here and you're going to do these," because he felt strongly that there was only one path, that you follow the steps, and that's how you become successful. And we've had many conversations about that over the last 25, 27 years. But I was stubborn or determined enough to kind of follow my own, fortunately.
Did you fly up there though? Did you take
I
them?
did.
You did do that.
Almost got fired, but I did. So, I think the thing, again, going back to the habit building, is I think people think, I can't do enough. I also, aside from the financial education micro-credential, I also teach an investment class at Pace Academy. So I've got ninth through 12th graders, where we manage a portfolio of real money, and the kids learn how to invest. And I think it sparks the idea in their minds that they can do it. Today, it's great because, in 30 seconds you can go on Robinhood or E-Trade or whatever and open an account in 5 seconds, right? I think the more exposed to it you are, Kuya, the better. And I think today, the barriers to entry are gone. Like when I was in college, to start a brokerage account, I had to talk to someone, they had to send me papers. It was it could take weeks. I'm not doing that. Today, you can go on your phone and in 2 seconds, you can be trading. So, and then from the standpoint of what to buy, I'll quote Warren Buffett. You never go wrong quoting Warren Buffett, which is if you don't want to do the research and think about your own investment, then just buy it. You can buy an index fund and just be passive. But I just think you get more. I talked a lot today about passion. I think people get more passionate about their investments when they understand what it is that they own. And so I encourage people to be a little bit more active than that. For those who don't know, cryptocurrencies are digital currencies. The difference between a stable coin and just a typical, a Bitcoin, for example, is that stable coin, the digital token, has to be backed by something tangible, either a dollar, a treasury bond, some other kind of foreign government debt or something like that, something that has value. So the largest stable coin is called Ethereum, and there's another one called Tether. But what this Genius Act is trying to do is to transform the way that all of us consume and to kind of incentivize merchants, and also really to incentivize transactors as well, credit card companies and banks, to abandon the traditional expensive, leaky, inefficient transaction system and go toward using stable coins to buy your Amazon stuff or go to Walmart or whatever the case may be. And Amazon and Walmart can create their own stable coins because then they have, the reason the government likes this, the reason our Treasury Secretary and our President like this is because if Amazon went and started its own stablecoin, it would have to go buy, so let's say they issued $200 billion worth of stablecoin, they have to go buy $200 billion worth of US Treasuries to back that stablecoin, creates an insatiable or just a consistent demand for Treasury bonds, which will inherently keep the interest rate on Treasury bonds lower. So that was sort of the genius, quote unquote, behind the Genius Act, was that it kind of helps incentivize, if this proliferates, and it hasn't yet, but if it does, and then the benefit to us as consumers and the benefit to the merchants is that you avoid that 3% credit card fee when, even whether you use Apple Pay or Google Pay or whatever, there's still transaction costs, whether it's on the merchant side, the customer side, or both. And so this would eliminate that because it uses something called the blockchain. Blockchain technology is revolutionary. No one's just figured out how to scale it yet, right? It's completely closed network. It's the reason why, at the beginning, digital currency was very popular with criminals, because if you were doing something nefarious, nobody could trace it because the blockchain is a closed transaction. So, regulatorily, they're going to have to figure out how to make that a little bit less private, because, government regulation is going to have to get in there in order for it to be a trusted method of transaction. But I do think that, stablecoin, I'm not sure about the other coins, but stablecoin I think has a future for sure. And blockchain technology has a big future once they figure out, kind of how to regulate it and scale it. You guys are amazing educators and they're going to come out with knowledge. That's great. The thing that I think differentiates this crop of graduates from previous is that, and again, this is not a judgment. It's not a fair judgment necessarily, because I know that COVID had an impact to this, but it's the interpersonal skills, right? It's the ability to look someone in the face. It's the ability to have a conversation, shake someone's hand, look them in the eye. We lost that for a little while. I think the fact that a lot of our kids had to grow up for a period of time, living in a scenario where everything they were doing was on a screen, I think it hurt in that scenario. And so we're seeing that change big time, right now. And I think the more that you guys can encourage that, put them in situations where they have to, network with people who may be intimidating to them or whatever the case may be, I think that's really important, because that's what stands out. When a 21-year-old goes into a room of, seasoned professionals and can hold their own and shake hands and look people in the eye and even admit when they don't know something, which is the hardest thing in the world for a 21-year-old to do. I think that shows a lot, and I think it's really important. The bottom line is, you see a lot of similarities today to what you saw in 99, 2000. I just think there's multiple markets right now, and you just have to be really, really careful. This is when indexing gets really hard, because if you buy an index, you have no choice, right? You have to buy the really expensive stocks and the really, the ones that are less expensive. You don't really have a choice. So you just have to be careful. And I feel like there are other asset classes out there too right now that I think are attractive beyond just equities. And so I think you have to be super careful and very diversified. Most employers are still looking for college-educated applicants, right? If you're an Elon Musk, you can do whatever you want, right? But if you're looking for if you're looking for a certain caliber of employee, you're looking for a college graduate, and that may not necessarily just be around the educational piece. It's also around the collaboration piece, right? You want to see that people have been in an environment where they've been challenged, where they have had to work in a group, where they've had to collaborate with people. And some high schools do that, most high schools don't. There's also a maturity level, right? There's a reason that some of the sports leagues now are putting in that you can't go into the draft coming out of high school, right? Because you're not emotionally mature enough, to do it. You're going to travel all the time. You're going to do X, Y, or Z. I think that while it sounds great because you're seeing these little, chats and small stories about people getting hired out of high school, I think that the maturation process that goes on through college is so important beyond whatever it is that you're studying. And I think employers are going to continue to look for that.
I want to thank you. We love everything you're doing for Kennesaw and for Rideout College. And thank you for joining us today.
Thanks for having me.